Hello and welcome to FX Street Currency in Play. I'm Matt Brown and I'm joined today by Mark Oswald, who is a strategist at ADM. Thank you for coming on to the show, Mark. Lots to talk about. Non-farm payroll Friday.
Yep.
So let's crack on. Let's have a look at the slides, at the headlines. Dollar yen flirts with the 113 handle ahead of US non-farm payroll release. Dollar yen trading, I mean, it's broken out a little bit.
Yeah, I mean, it's starting to look like it. It's a bit like the dollar index. I mean, overall, we're sort of looking for, we need something to confirm that we really want to get long with dollars again, apart from the fact that obviously dollar interest rates are so much more attractive than those elsewhere in the G7. So today's payrolls data, or rather the labour report as a whole, could make or break it. We're not probably going to get what one would term as a strong number. There is going to be a hurricane impact. The comparisons, I think, are justifiably made are probably with the impact of Hurricane Katrina, which was really quite dramatic. Back then, we had the ADP report coming in at minus 8,000, and it had been averaging 200,000 in preceding 3 months. But the better comparison, given that we had that ADP reading of 135,000 on Wednesday, is probably with Hurricane Sandy, where we got a reading of 130,000 back at the time of Hurricane Sandy against an average of 190,000. So a modest impact, and I think that's where I would draw the comparison, even obviously if the read across from ADP to payrolls is always not exactly a reliable one. We've certainly got strong indications from the ADP data that the hit is going to come typically in the services sector, but there's a big offset from construction, helped by reconstruction after the hurricanes, and the manufacturing sector. If we can get a decent number, I think anything which is 40 or 50 above the consensus of 80,000 would be seen as not necessarily strong, but a lot stronger than expected, and probably, if combined with the all-important average hourly earnings number coming in above the expected and rather non-committal plus 0.3% and an unchanged year-on-year rate of 2.5%, then that probably would give us that extra impetus that the dollar really needs. The only problem with the dollar yen is that we already have a fairly substantial yen short in there. So a lot of people are already positioned for that. There may be more joy, I would imagine, in terms of a big shift in dollar euro, simply because the market is actually surprisingly very long of euros, despite what we've seen in recent weeks.
Understood. And revisions as well? Look out for those.
Yes, the revisions definitely, as ever. August tends to be revised upwards. By the time we get to the second revision, anything up to 50 or 60,000. So that will be an important consideration in the overall evaluation of today's payrolls.
Good stuff. Looking at cable, pound against the dollar is getting whacked on political uncertainty. It had quite a bit to give back. I mean, considering we were up, in the mid 135 level, 130 levels, I should say. Now, potentially 130 could be
130 if the political situation doesn't improve. At the moment, it's sort of unclear if there's going to be an actual leadership challenge for Mrs. May. It would appear not immediately, but that it still lurks in the background. We may have probably sowed a lot of doubt in people's mind. And that's not particularly good in terms of the Brexit negotiations, because the counterparties in the EU don't know who they're dealing with, or, more importantly, what they want. And this is where really the whole problem with the leadership challenge is, that it's not Mrs. May who's the problem, but rather the fact that the Conservative Party is so divided on what they actually want to achieve from these negotiations. So you also have this situation where actually the market, according to the CFTC data, is just small net long of sterling, and that leaves a lot of vulnerability on the downside if we start to get into a situation where we think, say, the Bank of England is either one and done in November, or perhaps that they don't even go in November, in which case there's quite a lot of downside, down to probably something in the region of 127 for sterling. But it really depends on how that all pans out in that situation.
Understood. And let's just move on to the economic calendar today. And, well, look, it's non-farm payrolls, but anything else jumping out at you there?
Mr. Haldane speaking on trust in institutions, which is a very worthy, but I don't think many people in financial markets will be that interested. We do have the Fed speakers, and I think this is important in the context of the payrolls data. The payrolls data probably isn't going to change the Fed's view. And I think it's going to be interesting how emphatic Mr. Dudley, who also spoke earlier in the week, is that as far as he's concerned, it may take a long time, this period of transitory low inflation, but as far as he's concerned, he's not worried about the long-term inflation outlook. Mr. Kaplan will probably echo him. The interesting one will be Mr. Bullard, who actually has a lot of doubts about whether the Fed should be going ahead with a rate hike. But he's in a very distinct minority. I think the important message from the last FOMC dot plot was there wasn't anybody who had been looking at the previous meeting or the previous dot plot in June, shifting to the doubters section. And that in itself means that the likes of your Bullards, your Evanses, Mr. Kashkari, and Mrs. Brainard are probably, they are a minority view. Unlike before, in previous years, the Fed is basically seen from the same hint sheet. So I think we need to be prepared for at least a December rate hike and at least 2 next year. They've got 3 penciled in, and I don't think that's very well priced into markets, and it's not very well priced into the dollar either.
Understood. So potential upside for the dollar. Mark, thank you very much for joining us today.